Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Okay, first up is INPX. Okay, very sweet bounce today, closed up 61%. Congrats everyone. This bounced off of 50 on RSI, so RSI is at 63, still in the bull zone. You've got Fasto still in the 50 to 80 bull zone. Down here, the bullish move was the bounce off of the middle Bollinger Band. You could see here there were 5 red candles in a row. And then the bounce was off the middle Bollinger Band at 29.2, that is a very this was a very nice technical setup. So keep that in mind. You know, stocks that are trading in an uptrend, they tend to bounce off the middle Bollinger Band. So that was a really sweet bounce. And then it actually started the day right here at the 50-day simple moving average at 34 cents, and so it pushed above that level. You want to see that level turn into support now. Back here when it closed above on the 26th, it failed to hold that level and it pulled back. So you know, going forward, it needs to stay above the 50-day simple moving average, and then the key level to break is this closing price in the 26. It closed basically at that level today, and so if it can break above, then you're looking at you know, 62. There's going to be some resistance here, but if it can get above that, the next key level is going to be the 100-day simple moving average up here at 86. So yeah, so this is a really nice uptrend. You know, it pulled back. It has to break above this 49 resistance zone, 49.50. If it can get above that, it should continue heading higher. As long as that middle Bollinger Band holds, the uptrend is intact. Notice there was a bullish volume spike today, and then there was the MACD bull cross on the 8, 13, and 5. Okay, let's take a look at CTRV. Okay, the stock, you know, had a very nice follow through today, closed up 27%. So congrats everybody that got into this yesterday. Yeah, so the big move yesterday was the close above the 100-day simple moving average at 58. That is the gold line here, and so if you could see here, the top of this candle, it closed just above that level, and that was signaling more upside potential. It also closed above the 50-day simple moving average, which is down here at 54, the green line, and notice that the close was also above the top of the channel. Notice this very long multi-month downtrending channel, and so it broke through the top, and then today there was a big push higher. We were looking for this just above 70, the 71 level. There was a key resistance level back in May and back in June, and so it actually closed above both levels. That was very sweet. That was a strong move, and so now the big resistance level is going to be the bottom of this gap. You know, there's going to be some resistance here, you know, in this zone, but the bottom line is the bottom of the gap is the next key resistance level to break. You can see here there's a gap that formed back in April, and the bottom of the gap is always a tough level to break. If it can get above that level, the 200-day simple moving average at 99 will be the next simple moving average to break. Notice it's in the middle of the gap level, so a gap fill would be all the way up here at the 300-day simple moving average and at $1.16. So that would be the top of the gap. Notice there was really big volume today. It was pushing hard into the close. Okay, let's take a look at MNKD. Yeah, this stock has been filling the jar. It had a big gap open today. It's on a multi-day run right now. It's on a 3-day run. You know, it's been up for the last 5 days. It had a pause candle on the second day of the run, and so as you can see here, it you know, filled the jar up to this February level yesterday. That's where it closed at, right at this horizontal line, and then there was a big gap up open, and then it came all the way up to the top of this previous consolidation, this sideways channel zone from back here in January of this year, and so it closed right there. This 355, 354 levels, the key level to break. If you can get above that, then the next big level is up here from back in December, and that's the high close level at around 395 is going to be the next big big target. And so filling the jar, it can be a climax. So we got to keep an eye out here to see if it tops out. It did have a huge volume spike today. Notice it was the second largest volume bar for this year. So you always want to keep an eye out for a climax spike during a multi-day run. And you do have Fasto here at 97 at very overbought levels, and RSI at 83. So there's not a lot of juice in the tank. So keep that in mind. But this is a really sweet move for MNKD. It was up really big today, up 25%. And yeah, the calls were up. I was looking at up 380%. So yeah, congrats to everybody that was trading Mankind today. MNKD, huge winner. Good job. Okay, let's look at RGSE. Okay, so yeah, this stock closed up 189%. Okay, it's got RSI way up here at 91. You've got yeah, Fasto down here in the bull zone. So basically, the big deal with this stock is check out the candle for today. Okay, so it closed right at 237, and today's open was at 235. So you have the close and the open were right about the same level. And so even though there was this huge run up to 325 or so and a huge drop down to 180, it closed right where it started the day. So it was a total stalemate between the bulls and the bears. It basically didn't go anywhere between the open and the close, and so now the big thing is, can it hold this 200-day simple moving average? That's at 201. That's the big level to hold, is support below. If that level breaks, the next support level is down here at EMA4 at $1.45. Notice this was a big breakout above the 100-day simple moving average at 90. It started down here at 82 with the really tight Bollinger Bands. There was giant volume behind the move today. Keep in mind, they had good news today, but they do have a payment due, $1 million payment, and then they've got to come up with another $2 million. So the way this company, this is from today's filing. So they had this is their 8K, and yeah, they had a really good deal today. But the bottom line is they pay their bills usually by selling shares, and so that puts pressure on the share price. And so if you look here at the 15-minute chart, you'll see it started up here, started the day, pulled back, and then it had this nice run. And if you you look here, it had this nice run up. So it had this pattern where it worked its way up to 320, and then it stalled out and it hit resistance, and then it started with a downtrending channel. And so now that's how it started. It started heading downward, and it kept failing to break above the descending resistance. And so the break finally below the middle Bollinger Band was the red flag. So it started breaking it here, and then it finally, on the last candle of the day, it broke below the middle Bollinger Band, and that was the big signal that it was going to be a risk to hold. It did have the PSAR bull flip over here, so the dots did flip above the candles. That was a red flag, and then then you've got a bear cross here on Dci X, and then so the chart started breaking down. But the thing is that for downside risk, you've got this 2 level, which was the share price that was the support level this morning, and then you have the 50 simple moving average at 185. So if it drops down lower tomorrow, you want to see it hold that 185 zone, because if that breaks, then it could drop down to 135, down to the 100 simple moving average. If the 230 holds, then what it needs to do is it needs to come back up and break above that 320. The 320 is the big resistance level to break. It has to get back above the middle Bollinger Band at 290. If the middle Bollinger Band at 290 remains resistance, that's going to signal downside risk. If it gets back above that level, it could start running again. So just keep in mind RGSE RGSE has a tendency to give back gains, and it's always a risk to hold overnight. If you look here at the weekly chart, this is really heating up on the weekly chart. Notice how it had super tight Bollinger Bands, and then this week there's been this big breakout higher, and so this week's candle will not set until the closing bell on Friday, so anything could happen. It could pull back and form a long upper wick, or it could push higher and run all the way up to the 50-week moving average at $4.95, and so that is the next target. If it can turn this middle Bollinger Band into support and start a new uptrend, that will be the next key level to break. Notice it hasn't been it hasn't closed above the middle Bollinger Band for a very long time. You have to go off this chart. It's been many months. You have to go back years even. This is a 1-year chart. So this is really heating up. We're going to see if it can get an uptrend going, or if it's going to stall out and give back the gains. If this weekly chart starts a new uptrend, then that's going to be your signal that there is more upside potential. Okay, if it closes below the middle Bollinger Band, that's going to signal downside risk. So take a look at VHC. Okay, this stock is this is the weekly chart here, and so this is making a nice breakout this week. You can see here it's forming a nice big white candle, and it's breaking out above the 200-week moving average at 657. Okay, so that's the key level to close above on Friday and turn into support. It's hitting this key resistance here from February and then of 2016, and then down here in 2015. And so the 750 zone, 7 to 750, is a huge resistance zone. If it can close above that for the week and turn that level into support, then it could run up here to the 300-week moving average at 13. Notice there was a big red candle on a big drop there, so there's not a lot of trading in between 13 and 750. So there's big bullish implications if 750 turns into support. This has been a previous major resistance zone. If it fails to break, you could see it consolidate and test that 200-week moving average. Okay, take a look at DCIX. Okay, so this is one of those bad news shipping sector stocks that's like Tops and Dries, where they just sell shares and the share price keeps dropping, and it seems like there's no end in sight. And so what we do is we just keep watching, and what we're looking for is a close above this pink line. Notice how the candles have only closed above it a couple times, but each time that it does, it fails to get above the EMA 8, which is the lime line, and so the pink line is EMA 4, and so we want to see a close above that level at 58. That would signal the chart is heating up, and then the big level to close above is EMA 8 at 72. You have to go off this chart to see the last time it closed above that level, and so if it does close above that level, that could be the clue that it's finally starting to heat up. It could get a dead cat bounce. There's big volume down here. Check out all the volume, and so if it does get going and it breaks above that EMA 8, you could see a run up here to test dollar land and the middle Bollinger Band. In order to get a new uptrend going, it has to turn that middle Bollinger Band, currently at about 115, into support. If it keeps failing to close above EMA 4, that's going to signal that it's a risk to hold. Many times you have to wait until the closing bell to see, and then really for this stock, you really want to wait and see if it can get above that EMA 8. There are the percentage gains between EMA 4 and EMA 8 are not worth it for the downside risk. Okay, so keep an eye on it. We'll see if it can get a close above EMA 8. And then if you look here at ECYT, okay, this is the 15-minute chart. It held up really well today. It had made that huge move, and then it had the gap up open. So it had the big move, and then it's been on this nice run, and then it had the gap up open, and then there is an unfilled gap on the chart in between the high of day on the second and then low of day on the third. But the thing is the share price is stayed within this channel. Notice it's for 2 days. It's stayed within the same trading range. The open was a gap down open, and then it traded above the open at 5. It looks like there were buyers at 5. You can see there was a volume spike, and then it proceeded to run higher throughout the day. It did pull back a little bit at the end, but it closed above the middle Bollinger Band. It's still above the 50 simple moving average at 575. So if this gets above 620, 625, that's the close here, the high close on the 3rd from yesterday. That's going to signal that it wants to head higher. There was a bull cross here on ADX. You know, you've got the chart. The chart is set up where it could push and go higher. Now, if it drops below the 50 simple moving average at 575, that's going to signal downside risk, and the chart could break down. It could drop below this lower Bollinger Band at 554, and then you could see it go down to test the 100 simple moving average at 4 and fill that gap. You know, so it could, you know, to fill the gap, it would drop all the way down here to this 380 level. So yeah, so keep an eye on it. Sometimes they push it higher. That has been the pattern lately. There have been stocks with the big gap up open. They paused the next day, and then they've been pushing higher after that. So that has been a recent pattern. Okay, thank you very much for viewing this video. For more information on charts and technical analysis and how to use that information for trading, please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.